This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. My name is Mike Maroney. I'm coming to you today from the Monex Precious Metals studio. It's Friday, February 12th. Let's talk precious metals. Now, everyone's asking, is the bottom in the gold and silver market? Now, if you look back and try to find a specific event that may be the actual trigger point as far as the end of the correction and the beginning of the next major leg up in precious metals, you would have to go back to December 3rd. And that's when the Europeans announced that they would utilize negative interest rates. Now, when you think about negative interest rates, what is the reason for negative interest rates, and why in a negative rate environment is precious metal a quality investment? First of all, the Europeans announced negative interest rates because their economy is in distress. And when an economy is in distress, obviously it creates fear and uncertainty. And that fear and uncertainty is a very strong catalyst as far as for individual investors and major corporate investors to own precious metals. So on December 3rd, the Europeans announced negative interest rates. Gold was trading at $10.45, the lowest price in years, and silver was trading at $13.80. Since that point, gold rallied $220. Yesterday, hitting a high, believe it or not, of $1,265. A $220 rally since that announcement. And yesterday, the high in silver was right around 16. The actual high was $15.99. So we've seen a $2.19 rally in silver. Now, what we've also seen since that day is we've seen the Japanese announce negative interest rates in January. We've also had the Canadians announce negative interest rates. And we have Denmark, Switzerland, and Sweden currently in a negative interest rate environment. What that adds up to is 25% of the world's GDP is created by countries that have negative interest rates. Now let's talk about why gold in this type of environment acts as a quality wealth protection investment. Negative interest rates, obviously uncertainty, obviously an environment where the economies are slowing, and they're trying to create a situation that forces cash to move out of banks and move into the economy. What this also does is it flattens the yield curve. And what you'll see is the curve between the longer end and the shorter end of the yield curve tighten. It brings down the interest rates at the longer end of the curve. So the bottom line is, for investors, it's harder and harder to find a quality yield. Yes, you can make 2.5% to 3%, but you're locking something in for 10, 20, 30 years to get that type of return. That's not the type of investment investors are typically looking for in this type of environment. Now, in this environment, we also have a situation where cash becomes trash. And what I mean by that is, if you put money in a bank and you're being charged to actually hold your money, the last thing you want to keep your money in is cash. So what we've seen is a rotation out of cash, especially in Europe, especially in Japan, into gold and silver. Why? Well, one, there's no opportunity cost to own precious metals right now. If you own cash, you're walking backwards. So the cost of owning cash in comparison to owning gold is in a positive correlation for gold. So more and more investors are looking at gold as a quality way to hold on to a currency. And that currency has been moving up and moving up quickly. And what we did is we broke through a very key resistance level at that 1208 area, shot all the way up to 1266. We've had a little bit of back and fill. We've hit 1232 on the low. But the bottom line right now is the world has become aware of the problems that exist throughout the world as far as the world's economy is concerned. Now investors here in the United States are becoming fearful. Instead of the Fed raising rates, could we see negative interest rates out on the horizon? And if we do, obviously that means there's real uncertainty, there's real distress, and it means that we could see a major move as far as U.S. investors into the precious metals market at these incredibly low price levels. What we would like to do is help you understand why now may be one of the best times to own precious metals. Yes, we've seen a $220 move in gold, but even with the recent high of $1265, we're still almost $700 off of the all-time high. And yes, we've seen a $2 move in silver, but silver is well below its all-time highs. We're talking about $50 to $16, $34 below. And if we're starting to see major money move into precious metals, now may be the best time to try to get in on the ground floor. Yesterday I saw Mark Cuban, who is a billionaire investor, known for his flamboyant ownership of the Dallas Mavericks. He basically stated that he's moved a portion of his portfolio into gold. And when they asked him why, it was because he said it's so uncertain out there. What's happening in Europe? What's happening with the sovereign debt? It makes sense for every investor to own a portion of their portfolio in something that provides wealth protection. We're starting to see action in this market. I don't want you to look back and say, I should have made this call a long time ago. What you need to do is get on the phone today, give us a call so you can talk to one of our representatives and we can get you out one of the special 2016 precious metals reports. Give us a call today. Thank you.